Good morning. Paul Georgie from Allendale. It's October 21st, Wednesday morning, and after a very late Cubs game and leaving the Cubs with only one more chance to go on here to the next level, markets are very quiet. News is certainly limited in the grains. I think we still are talking about two factors that we've mentioned here in the last several days. We got weather. Conditions are around the world that is impacting grain production and could impact grain production. Southern Plains, for instance, they should be getting some rain throughout the next several days into the weekend with some very heavy amounts. So that should be supportive to the hard red wheat growing areas. Brazil, the rain is still on target there for later this week and early next week in the areas that have been very dry. Mato Grosso, one of the largest soybean producing areas in Brazil, should be getting some moisture and help their soybean crop get off and going. And the former Soviet Union, FSU, is still looking for more rain to move into their winter wheat areas, which should be supportive there. The other side of the equation is the demand side. What are we seeing for demand around the world? That continues to be very sluggish, and traders are looking at outside markets to get an indication there. Tomorrow or today, we've got headwinds in the outside markets, such as the crude oil, which is down right now about 80 points. That's putting a little bit of pressure on the corn trade as it impacts ethanol production and indirectly affects corn price. So we've also got the discount of U.S. corn versus the southern hemisphere corn. That continues to be a problem. China is trying to get rid of some of the stocks that they have stored up here over the last several years in their corn production. So that is weighing on the corn market a little bit. But the strongest point there is that the farmers are not selling. Processors are still looking for some corn. We're hearing the eastern ethanol processors have increased their bid sharply yesterday. They held them steady today. So they're looking for some supply, and the farmers are saying we're going to sell it when the price gets higher, and that's giving some underlying support here to the futures market. Technically, the December corn contract is something to watch. We had an outside day up yesterday in December corn. So if we can follow through to the upside there, it might be able to take us back into this upper trading range to the 385, 390, maybe even the $4 area in the December contract. So we're watching that closely. Also, option expiration for the November contracts will be Friday, and November beans are hanging right around that $9 area where we do have the largest open interest right now in the November options. So monitoring that closely as we move forward here. We do have export sales out tomorrow, so that will be talked about and be looked at as from the demand side of the equation as well. In the livestock trade, we still got a standoff out in the country as far as cash cattle. Will the packers have to bid up and buy cattle this week? They paid up a lot last week, so they're going to be very reluctant about adding several more dollars to it. But right now, the asking prices are $3 to $5 higher. So we'll see how that turns out, and it's probably going to go right down to the wire here late in the week before the packers actually make a decision and buy some cattle if they need it. But they are getting support from the cutout values. Choice beef was up $1.74 yesterday. Select up $2.63. Pork cutout was down just slightly, down 35 cents. But looking at the overbought condition in the futures market, still I think the main factor that we're concerned about, I mean, we'd like to sell the market in because of the overbought condition. However, I think you've got to be very cautious about it, because on the way down there was a lot of trend following funds that jumped on this cattle market, pushing it down, down, down. And now as this market recovers, we don't have as many sellers there, and they need to come out of their positions as this market moves higher. So we could be in for a very volatile cattle trade and hog trade as well. So stay in touch with Allendale brokers, and we'll try to help you and guide you through this thing and give you some ideas on how to trade this market with some minimal risk using the option strategies. So if you got any questions, don't hesitate to give us a call here at Allendale at 800-262-7538. We wish everybody a very successful trading day, and we'll talk to you tomorrow morning. Thank you.